In this video, what I want to do is I want to walk you through 3 potential scenarios for the year of 2023, which we could see play out in the chart of Bitcoin. So we're still in the second week of January. We've got the whole year ahead of us. What is going to happen? Are we going to get a crazy pump, or the market's going to go up? Is it just going to trade sideways for most of the year, or is it going to continue trading lower? So we're going to dive into the charts. I'm going to share with you those 3 potential scenarios. If you do enjoy the content, please smash the like button down below. Subscribe to the channel if you haven't done so yet. And if you want to follow me on Instagram or Twitter, the links are in the description down below. Okay, so the last couple of days we have had a bit of a pump in Bitcoin, and we actually have seen Bitcoin really get close to this $19,000 level. In fact, it just wicked over it a little bit in the last few hours. So now we're back at $18,800 on Bitcoin. But as you can see, when you zoom out on the weekly chart on Bitstamp, you can see over here, going all the way back to 2012. We're going to look at that in a second. The question that is on most people's minds, that obviously everyone wants to know, including myself, is how is this year going to play out? And the best we can do is simply look at previous scenarios, look at the previous bull and bear market, what happened there, and also the one in 2015, and then try and create 3 potential scenarios. Do we get a bullish scenario? Do we get a neutral scenario where it trades sideways for most of the year? Or does it continue lower? We look at each one of those, and then at least we have a plan that whatever is going to happen this year, we can try and match it with whatever scenario is more likely, so that we know if it is bullish, this is the strategy. If it is going to trade sideways, this is the strategy. Or if it is going to go lower, then this is the strategy. And at least that way you are more prepared for whatever happens, so that you have a plan. You can be less stressed, more relaxed, and hopefully make more profitable decisions. So one thing that's really interesting to note about Bitcoin since inception is the boom-bust cycle based around the Bitcoin halving cycle. So as you can see here on the chart, I have overlaid the 3 halvings that we have had here, the vertical lines, and the 4th one that is set to happen here in about March of 2024. Obviously, we had one in May 2020, then in July 2016, and in November of 2012. And this is approximately just close enough, not to the exact day. It's a weekly chart, okay? Just roughly, look at what happened to the price action around those halvings, okay? You can see over here, we started building up a little bit before the halving, and then a major rally, and then a bear market, till a few months out of the next halving, major rally, bear market. Then a few months out, before the halving, major rally, and then bear market. So, there's never guarantees that this is going to continue another time, but if it does continue another time, then we could be looking at somewhere over here, just before that halving, so somewhere between January and March of 2024. So only in 1 year from now, starting that pattern of leading up into the halving, and then a major bull market in 2024, followed by another bear market. So that is only if this pattern repeats a 4th time. So far, it's happened 3 times. Will it repeat again? I don't know. Only time will tell. But we should be prepared for it, that in case it does close to that halving, that we do end up seeing this play out. So I'm going to change the chart here to log scale, because it allows us to compare the previous data more visually, that it's better understandable. Okay, so what we have here is, let's compare, starting out with the 2018-2019 bear market. Let's see what happens if that were to repeat this year. And the reason why we're doing that is because it's simply the most recent bear and bull market that we have seen, and let's see if it does repeat. So let's break down what happened from 2017 to 2020, basically. So we peaked in December 2017 for that previous bull market. Then we had a 1-year bear market that bottomed around about the middle of December. So it's almost exactly 1 year from peak to trough. Then we had some sideways action over here. But in about March of 2019, we really started a major rally to the upside, which peaked in June. So that is the situation we're in. If we are looking at the 4-year cycle potentially repeating, which so far it has. So if you look back at the bull market history, it peaked at the end of 2013, at the end of 2017, and the end of 2021. Those are perfect 4-year cycles. So if we are thinking that that could repeat, then the year of 2019 might potentially be the same as 2023, and that is why I'm looking at this scenario. This is based on the 4-year cycle, and we are looking at that. So what we can see over here is that from this absolute low in December 2018 till this peak over here. That was a 330% gain in a period of 6 months. So basically, it started in about January, it went sideways for a few months, it picked up in about March, and then it really pumped until the end of June. So a 6-month major rally, right? So we are now in January. Could that be repeating? We are starting to see a bit of a pump in this first week of January, these first 2 weeks. So that could potentially be interesting. We're looking at a 6-month rally over here. But then what happened is that from that point, right, it went to that 13,000 and it dropped all the way back down with the March 2020. That was obviously the health crisis and those lows over there. So you can see it dropped another 70%. So we had this rally for 6 months. And then it took almost another 9 to 10 months of drop from that point. So if you got all euphoric and like, hey, the bull market is back, things are pumping, it's going crazy. Nope, got rejected, slow grind all the way back down, another 70% drop. And only then did the new bull market really start in about March of 2020. Obviously, after that major sell-off happened, then everything started to recover. And what we also need to keep in mind is that the Bitcoin halving happened in May of 2020, so right about over here. So you can look at this and think, well, the rallies in the past have only really started a little bit before the Bitcoin halvings, which happen approximately every 4 years. This was the halving, the red vertical line here. The next halving is set to happen somewhere in around March of 2024. So it's still quite a way away. So you can see we had this rally over here from the bear market lows for a period of 6 months. Okay, then it went down for almost 9 months, dropped another 70%, and only just before the new halving started, we started the major bull market. Okay, so this is basically the scenario over here. But what I want to show you, what is really interesting, is that even though this may look random, it is actually completely not, because you can see over here, when I put this Fibonacci retracement over it, what ended up happening is this whole rally was a complete retracement to exactly the Fibonacci golden pocket. It went to the 0.618 and 0.65, that is the golden pocket zone. It went exactly to there, got rejected, and went back down. And that gives it something that is more repeatable, because now we can say, okay, so what happens if we put the Fibonacci golden pocket over this entire move of our recent bear market? What could that end up looking like? And this is, of course, making the assumption that the low is in. Maybe it's not yet. Okay, maybe we still go a little bit lower, which obviously would change the level of the Fibonacci golden pocket a little bit. But roughly speaking, right now, if we assume the low is in and we put this Fibonacci retracement on there in the same way as we did in 2019, that would be at approximately a level of somewhere in the mid to high 40,000s. So between $45,000 and $50,000, which seems pretty crazy, right? Because Bitcoin is currently trading at about 19,000. So that would be a huge rally. Percentage-wise, it wouldn't be that crazy. Okay, because it did 330% in 2019. So if it does that rally from here, you can see percentage-wise, what would that be? That would be only 165%, right? So percentage-wise, it would be a lot less than what it did in 2019. But that makes sense because the market cap is still a lot higher now, and obviously the price is a lot higher. We're starting that rally counting it from 15,000, whereas in 2019 we started counting it from 3,000. Okay, so this is the potential scenario. The red vertical lines here are the halving. What if this repeats? And if I were to compare the previous bear market pattern for pattern, bar for bar, just copy and paste it, you can see overlaying it could look something like this. And we could, by June or July this year, if we get that exact scenario and a rally to that Fibonacci golden pocket, imagine what this looks like over the next 5 to 6 months. We get this major rally to between 45 and 50,000. But then maybe we get another 9 months down and another 70% drop from here, where it drops all the way back down to under 20,000 again before starting the real bull market somewhere near the halving, again a little bit before the halving, which is set to happen around March of 2024. So that would be what the scenario looks like. Okay, we get a crazy pump for the next 5 to 6 months into the mid to high 40,000s. Everyone thinks the bull market is back, we're going to new all-time highs, etc., etc. Nope, it gets rejected here and it drops back another 70%. Lots of people who bought there, who didn't sell at all, they end up getting wrecked, and at this point everybody thinks it's over, and then it starts to recover around about that halving period, and then we go for another major bull market cycle. This is what it would be like if the 2019 scenario repeats in an exact copy way. Now, what we need to be aware of, if the scenario ends up playing out, and let's say for the next 6 months we do get some crazy rally, you want to start being prepared for a rejection around that Fibonacci golden pocket level. So between 40 and 50,000, somewhere around there, if the price gets there, okay? Then be prepared for the fact that it might not be a new bull market. In fact, it could just be a repeat of 2019. It could end up just completely retracing back down again from there. So you want to be careful at that point not to start FOMO buying, but actually to consider hedging or maybe even getting out of the market if the charts at that time show that kind of setup, because it might be a trap and it might go all the way back down. And ideally at that point, you want to be out of the market and be able to buy back in lower again 6 to 12 months down the line. The interesting thing about this scenario is that also it could in some way line up with what the Federal Reserve would do in terms of rate cuts. Because if the Federal Reserve were to cut rates later this year, then based on history, I've shown this in other videos, 6 to 12 months after those rate cuts start, we could start to see a major crash in the stock market. So imagine the Fed starts to cut rates somewhere in the next 2 to 3 months. Okay, even though they're saying they won't, imagine they do, and then we get this major rally before that starts happening. But then, you know, looking towards the end of the year, mid to end of the year, those effects start to kick in. We get a major sell-off in stock markets, crypto markets. It all goes back down again in a similar way as it did the last time. And then after that happens, they start the money printers again. Everything, the interest rates go all the way back down, so money becomes cheap. They print more money again, and we start another major bull market in 2024. Just a potential scenario. Ultimately, time will tell what ends up happening. So I want to share with you now the 2015 bear market, what happened there, and if that were to repeat, what it would look like now. And this is a much more boring and frustrating scenario because the price basically went sideways for majority of the year following the bear market. So you can see over here in December 2013, we had the peak of the bull market. In beginning January of 2015, we had the bottom of that bear market. So just a little bit over 1 year that it spanned from peak to trough. Very similar to 2018, just a little bit over a year. And then from the moment of that wick low in January 2015, all the way up to about November of 2015, maybe October, you can count a little bit earlier. But basically for 10 months of that entire year, the price just traded completely sideways in a range of about $100. And then the $100 is a nominal amount, so that's not comparable right now, but that's about a 30% range. So it just went up and down and sideways for most of that year. And that was incredibly frustrating, especially back then, because nobody really knew the future of Bitcoin. It was still very early. Nobody knew, is this thing dead? Is it ever going to have another bull market? And obviously now in hindsight, we know it went way higher than that. But this was a very frustrating period because it basically just went sideways. It went up, down, sideways. This is the accumulation period, right? Very obvious to spot now. It's just a massive accumulation period before the next bull market. And it only started to break out once again. You can see over here about November of 2016, which was about 6 or 7 months before the next halving. And then we started a major bull market after that. That was the 2017 bull market. It was a year of a bear market over here. It was about 10 months of sideways trading. Then about 6 to 7 months before the halving, it started building up. And then we had a major bull market over here, followed by the next bear market. So copying that exact price action from an accumulation range after the 2013 bull market to the 2015 bear market, it could look something like this, where it basically just ends up trading sideways in a range between about 15,000, assuming that is a low. Maybe we still get a bit of a wick to 12,000 somewhere in the coming months, assuming that it stays in that range, so somewhere between 15 and 25,000 for most of the year until about October or November this year, and then several months out before the halving. Obviously the halving would be somewhere in March, so this would be about 4 to 5 months before the halving. Maybe it starts to go sideways, start breaking out of this range, starts getting in about the $30,000 range before the halving, and then after the halving, starting another major move to the upside. So this would obviously be a more neutral scenario, maybe very boring and frustrating for those who want the bull market to come back, or for those who are overextended and really need the bull market to be able to make money. It's going to be incredibly frustrating. Also, for people who don't believe in crypto or don't have the long-term vision in it, this kind of sideways trading in a range for a period of almost another year is going to get people to absolutely just capitulate and give up on crypto. They're going to think, oh, it's dead, we're never going to get a bull market. Every time it goes up a little bit, they get some hope, they get crushed again when it sells off to the bottom of the range. And it's just a incredibly frustrating thing for a lot of people who will end up just, maybe selling whatever crypto they have to be able to invest it in other projects, or maybe they need it for living expenses, or maybe they want to start a business. They think, okay, well, it was nice, maybe crypto is over. Might as well take that money and put it into something else where I can make money. And exactly at those periods of extreme boredom and frustration towards the end of it, when everyone just kind of gives up and only the diehard like hodlers are left over, at that point we're going to start to see the breakout and maybe a major run to the upside. So this would be a more neutral scenario and a repeat of what has happened in 2015 during that bear market accumulation period. And then a third potential scenario that I want to share with you, which is something we have not yet seen before, and something that is a lot more bearish and pessimistic than what most people expect, and what even I expect. I don't think this is likely, but like I said, I want to share with you those three scenarios that you can be prepared for: best case, neutral, and worst case. And if you think the worst case could never happen, I think that's not a good idea to say that it could never happen, because you have to factor in the absolute worst case scenario for any type of investment, which is basically, any money that you have invested in crypto could go to zero. This is not quite that bad that it will go to zero, but it looks pretty bad, because you can see here on the chart, what if we get prices in Bitcoin and the whole crypto market that have never yet been seen before in terms of a cycle low? Okay, so we're thinking this is about a 70% decline, just over 70% in our current bear market. Previous bear markets have been about 86%, 84%. Okay, so we've never seen something like this. But what if the market continues to slowly bleed? And sure, we get some sort of crazy, bear market rallies and it moves sideways. But what if we get a major sell-off later this year where things get so bad that Bitcoin goes to prices that people believe it can never get to? We're talking about below 5,000, maybe even to test the lows of the 2018 bear market at around $3,000. $3,000 Bitcoin. You must be thinking like, are you freaking crazy? That is never going to happen. I hope not. Okay, I hope not. But at the same time, what if it does? We have seen some crazy stuff happen over the past 3 years. Things that people thought would never happen, right? In terms of restrictions on our lives, on how we could travel, all that kind of stuff. And if you had asked anyone before it happened if it could ever happen, most people would say absolutely not, that is absolutely crazy. And here we are in 2023, and we know what has happened in the last 3 years worldwide. Okay, so crazy stuff can happen. Financially, there's a lot of problems in the world with the financial system, with the economy, with the recession. Things are not great with inflation, right? So what if things continue to get worse? We're only 2 weeks into 2023. What if some crazy events start to happen and the markets just go absolutely terrible? There's more selling, more forced selling, more bankruptcies. Who knows what's going to end up happening? And something like this ends up playing out. We just go sideways. We have some rallies up and down, and we get a major sell-off later in the year. We retest the lows, but then towards the halving, maybe we see some relief, and maybe we see another run back up to the highs, something like this. So again, this is a complete projection based on nothing. This bar pattern isn't copied from anywhere that we've had it before. We haven't had a sell-off this deep in crypto, okay? But I wanted to share this with you, worst case, that what would you do if this ended up happening? Would you be okay? The amount of money you have invested in crypto should be risk capital that, worst case, you can't afford to lose. If crypto goes to zero, you should still be fine financially. If it goes to $3,000 Bitcoin, and you would imagine what that would do to altcoins, right? It would absolutely destroy the crypto markets. But imagine this does happen, and imagine Bitcoin right now goes to $3,000. Would you be okay financially? And if the answer to that is no, you need to really start to think about your strategy and about your investments, and you should probably change some stuff. Consult someone, consult a financial advisor, make a plan. But you should be okay that if this worst case scenario plays out and Bitcoin drops to 3,000, and obviously the altcoin market would be absolutely decimated, at that point, you should still be okay financially. It should not affect your ability to pay bills, to retire, to pay for food, or anything like that. So please do be careful, factor in this worst case scenario. Let's hope it never happens, okay? I don't want to see this happening because it would be very bad for the crypto markets, but as a worst case scenario, factor it in. I would much rather see this scenario play out, which is a repeat of 2019 and a rally to the mid to high 40,000s to the Fibonacci golden pocket zone in the coming months. Hopefully we do get that. But I've given you these three scenarios, and from here onwards, we'll just have to continue to monitor the monthly chart, the weekly chart, the 3-day chart, the daily chart. As time develops, the chart reveals more into which direction it potentially wants to take and which scenario ends up potentially being more likely. So now that you have these three scenarios, it can help you be better prepared for making decisions of when to buy, when to sell, when to hold, and how long to hold for potentially. So hope this helps you. If you do like it, smash the like button, share this video with friends and family, put it on social media, refer someone to it. It would be really great to get this out to more people. Subscribe to the channel if you haven't done so already. And if you want to learn more from me, if you want to stay up to date, if you want to join my VIP membership and be a part of our 1,600 investor community, we have a private Discord group where we're in there every day. You can chat to everyone. You can chat to me personally. Then click the link in the description down below. There's a link how you can join that VIP mentorship. Thanks for watching. I will see you in the next video.